on Business Incorporated today. Egypt to save 16 billion Egyptian pounds after price increase following removal of diesel subsidies. Electricity Company of Ghana recovers 3.1 billion Ghana cedis from revenue mobilization exercise. And Rwanda records 171% up in tourism revenue for the year 2022. Good afternoon. Welcome to the final episode for this week of Business Incorporated here on Channels Television. I'm Ini John McQuarrie. Let's get right to it with the market numbers, starting with Nigeria sustaining that bullish sentiment it closed with yesterday, but at intraday it's marginal at 0.01%. Looking there at South Africa, recovered from yesterday. Yesterday intraday it was in a negative 0.71%. Now it's recovered almost 100%. It's at 0.77% at 77,868.44. Looking at other markets in Africa, Egypt's EGX 30 is closed today, but it closed in the red yesterday, 0.03%. Kenya also for Thursday closed positive, beginning to recover just a bit, 0.16%, but still at 100 there for its all-share index. Well, moving over to the Middle East now, where we see a mix at intraday. As we know, on Fridays, it's just the UAE markets that trade. Abu Dhabi is in the green, 0.34%. Dubai is, however, on the flip side, 0.15%. Other markets in that region, even though they are closed for today, Saudi Arabia closed yesterday, almost 0.5% in the positive, while Qatar closed 1.48% in the positive for yesterday, Thursday. Let's move over to Europe now, and this weekend is the story everywhere, the coronation of King Charles III in the United Kingdom. It's making waves, moving markets, and determining investor sentiment. So following that, we have Lars joining us now to tell us, we've been talking a whole lot about the UK economy here. Let's see from the eyes of residents in Berlin and Europe what they see when it comes to U.S. economy as it connects to this coronation. Hi, Lars, good afternoon. So what are you guys seeing concerning the coronation?
Yes, thanks for having me. Indeed, the UK economy could use a little push. Right now, it looks like gross domestic product will decrease by 0.3% this year. It will be the weakest number for any of the major economies worldwide. That's according to the International Monetary Fund. The UK has been suffering from inflation. There's been a lot of strikes as people are voicing their dissatisfaction over rising prices and lower living standards. Actually, the number of people searching out food banks is way up. So what can the coronation do about that? And not much, of course, but it will help some. Mostly retail and tourism will definitely benefit. Retail sales were over 100 million euros higher in the week of Queen Elizabeth's funeral last year as they were in comparable weeks. And looking at British retailers right now, they're going all in on the crowning, offering anything from cookies and collectibles to jewelry for the occasion. If it sells well, it's certainly going to be a boon to the sector. Also, restaurants and bars will be packed over the weekend, also to a point where that business is greatly benefiting from the events on Saturday.
Yeah, well, Lars, while this is the good side of it, there are also some negative expectations.
That's because Brits are also getting an extra day off. The coronation is set to be a 3-day event, and Monday is a national holiday. That means offices are shut, stores too, and some economists fear that this one extra holiday may just eat up the benefits the crowning could have otherwise brought to the economy. So we'll see what numbers we're getting after the whole thing is over. But in the end, it's very much possible that the positive and negative effects from the coronation balance each other out, and that there won't be much of an economic stimulus at all.
So let's look at the sentiments with investors and all of that. What are their sentiments? What does it look like?
Well, to start in the UK, as much as there are people celebrating the first coronation over 7 decades, and as much as they want to buy limited edition cookies and other souvenirs, not everyone is happy about how things are going. The crowning will cost taxpayers millions. The government is refusing to put an exact number on expenses. Now, spending millions to celebrate one extremely rich man is certainly not a good look at times when people in large parts of the country are growing more desperate and people are struggling to put food on the table and pay their bills. But to look outside many of the world's countries that belong to the Commonwealth, where people are subject to His Majesty the King, many of those countries have had enough of the monarchy as well. In Australia and Canada, most people have said in surveys recently that they really don't care about the coronation or any of that, and some smaller nations are actually trying to figure out how to break away from the crown. The last country to transition to a republic was Barbados in 2021, but at this point, 6 more are thinking about it. Among them are Jamaica, Grenada, and Belize. However, anytime a country is plotting to remove the king as a head of state, there's been one common theme. They do want to stay within the 40-nation Commonwealth, and that, of course, is because of better trade relations that they want to keep with Britain and with each other.
A lot of things will be going through the minds of different people as the coronation goes on. Thank you so much, Lars, for bringing the picture closer to us there. All right, so let's go to Asia now, where markets were mixed as banking fears were reignited on Wall Street, sending the 3 major U.S. indexes into a 4-day losing streak. Regional bank shares sold off, with SPDR, S&P Regional Bank, dropping more than 5%, and some banks seeing volatile trading. Let's look at the numbers there. AS200, that's of Australia, is positive 0.37%. Nikkei 225 is positive, also 0.12%. The only negative for now for KOSPI, 0.02%. And there we see that it's being slipped by 0.48% to close at 3,347, and the Shenzhen Composite also is down. That's what you have there. Now, China's Caixin Services Purchasing Managers Index for April slipped to 56.4 from March reading of 57.8, but remained in expansion. As we know, more than 50 is expansion, while the Caixin Manufacturing PMI fell into contraction territory. In the United States, stock futures rose on Friday after tech giant Apple posted its latest quarterly figures, and investors looked ahead to the release of fresh U.S. jobs data. Looking at the numbers closer now, Dow Jones is 0.33% up at 33,304. S&P was also positive 0.49%, almost 0.5%, and then the tech guys are also positive 0.59%. Now, Apple posted beats on the top and bottom lines for the fiscal second quarter, propelled by iPhone sales. Apple shares gained more than 2% in pre-market trading. Regional banks also rose broadly, with the SPDR S&P Regional Banking advancing 1.4%. PacWest, which is down sharply this week on the news that it's considering strategic options that include a sale, popped nearly 12%. Western Alliance also jumped more than 10%. Let's take a few steps back now and see how yesterday, Thursday, ended in trading with Maria Bird.
U.S. stock market had a major fall on Thursday as the Dow Jones lost nearly 300 points, ending the day at 0.86% down. The S&P 500 closed at 0.72% down, and the heavy tech Nasdaq was down by 0.49%. Many investors are also unsure of the banking industry, as the instability on Thursday was unprecedented, as many regional banks are showing major loss. It is also clear that investors are watching to see the Federal Reserve, as they were a bit shaky about the 0.25% interest rate hike, a big concern that could lead to a recession in the U.S. The U.S. stock market is unsure about the future for the days and weeks ahead.
Thank you so much, Maria, for that first day's trading. Now, moving on now to the global oil space, prices rose on Friday but were poised for a third straight week of losses after markets registered dramatic drops on fears of a weakening U.S. economy and slowing Chinese demand. Brent crude rose $1.24 to $73.74 a barrel, while U.S. West Texas Intermediate crude was up $1.13 to $69.69 after 4 days of declines that sent the contract to lows last seen in late 2021. The Brent benchmark was on track to finish this week with a decline of about 7%, while WTI was set for a 9% loss. Worries over a U.S. regional banking crisis persisted after PacWest Bancorp said that it planned to explore strategic options. In China, factory activity contracted unexpectedly in April as orders fell and poor domestic demand dragged on the sprawling manufacturing sector. Service activity in China grew through April, though the rate of its expansion has slowed. However, expectations of potential supply cuts at the next meeting of OPEC Plus in June have provided some price support. In the metal space now, gold prices were flat on Friday but are set for their biggest weekly gain in nearly 2 months as hopes of a pause in the United States Federal Reserve's interest rate hike cycle and banking worries in the country bolstered the safe haven metals appeal. Spot gold was a little change at $2,050.63 per ounce, but was up 3% for the week. U.S. gold futures were up 0.1% at $2,058.50. On Thursday, prices jumped to $2,072.19, and that's just shy of a record high of $2,072.39 that it hit in 2020 after the Fed signaled a likely pause in its rate hike tightening campaign. Fed Chair Jerome Powell pushed back on market expectations of the rate cuts this year and highlighted that the central bank would watch incoming data to determine future monetary policy decisions. We come to Africa now. Zimbabwe's central bank has set a price for its gold-backed digital tokens. The country is planning to sell its gold-backed digital currency to investors starting from Monday, May the 8th. The tokens will be sold at a minimum price of $10 for individuals and $5,000 for corporates and other entities. According to a statement released by the Reserve Bank of Zimbabwe on May the 4th, the gold-backed digital currency tokens will be sold in both the United States dollar and local currency. However, the local currency price will have a 20% margin above the willing buyer, willing seller interbank mid-rate. Interested investors can participate in the offer from Monday and it will close 2 days later. The willing buyer, willing seller interbank mid-rate is the exchange rate at which banks are willing to buy and sell currencies to each other. It is considered the midpoint between the buying and selling rate, and it's determined based on prevailing market conditions such as supply and demand. This rate is used as a benchmark for many financial transactions and is often used as a reference rate for exchange rates quoted. And Egypt will save up to $16 billion, that's about $516.97 million or 20% of the annual diesel subsidies bill owing to the recent increase in prices, according to a statement released by the Ministry of Petroleum and Mineral Resources. In its quarterly review meeting, the Fuel Automatic Pricing Committee, FAPC, raised the price of diesel by 13.7% from about 7.25 Egyptian pounds to 8.25 Egyptian pounds. The Petroleum Ministry ascribed the FAPC decision to raise the price of diesel to the increase in petroleum products in global markets, as well as the devaluations of the Egyptian pound between July 2022 and April 2023 due to the ramifications of the conflict between Ukraine and Russia. The ministry explains that the government will be subsidizing diesel for consumers at $4 Egyptian pounds for a litre given that the actual cost of diesel increased to 12.25 Egyptian pound per litre. Under the IMF-backed recent $3 billion loan deal, Egypt is committed to fully implement the fuel price indexation mechanism required for that loan. Welcome back to Watching Business Incorporated here on Channels Television. Official data from Rwanda Development Board shows that Rwanda's tourism revenues increased to $445 million in 2022, and that's up 171.3% from the previous year, with nature-based tourism bearing the potential to drive the country's economic growth. Gorilla trekking, a unique tourist attraction in the East African country, generated revenues of $113 million to the government institution. The country attracted about 110,000 visitors to its national parks in the year in consideration. And from Rwanda, we go to Tanzania, well, more of Africa, because Tanzania has unveiled ambitious plans to construct what would be by far the largest bridge in Africa, a 50-kilometer structure connecting the mainland to Zanzibar Islands, and it's all to boost trade. Well, the country has been looking to diversify the economy of Zanzibar Islands, home of 1.6 million people, which depends mainly on tourism. Deputy Works and Transport Minister Godfrey Kasenkenya said that the government was talking to prospective Chinese investors about the plans to finance a 50-kilometer bridge between the coastal city of Dar es Salaam and Zanzibar. And moving on now, we go to Ghana, where it's a bit of good news for them also, because the Electricity Company of Ghana has recovered 3.1 billion Ghana cedis from its nationwide revenue mobilization exercise. The figure was released from a targeted 5.7 billion Ghana cedis owed the power distribution company by individuals and corporate bodies in unpaid bills as at the beginning of the exercise, which was March the 20th this year. Meanwhile, the company has earmarked the last week of every month for revenue mobilization in an effort to retrieve the remaining 2.6 billion Ghana cedis. Now let's go to Kenya. Kenya has been in the news recently. Remember that protest that started last year took a break and was supposed to continue again yesterday, but well, we did hear that the opposition had agreed to suspend that anti-government protest after reaching an agreement with the government of President William Ruto. And well, we look at the reason why this protest even started in the first place, which is rising cost of food prices. And prices have been rising gradually in Kenya since 2022. Drought only added to it, to that food shortages and increased prices. Of course, there's also Ukraine war, and costs have stayed very high. Now let's have Matt Kindiger join us now to take a deeper look into the causes and possible impact of this. Hi, Matt. Good afternoon. So we see these obvious reasons. Are there some other reasons that we're missing that have caused this hike in food prices in Kenya? Even though it's not just Kenya, we see a hike in food prices in almost every country at this time.
Yeah, well, thanks for having me on the program today. So, yes, Kenya is not alone in terms of seeing high food price inflation. You know, here I'm based in the UK. We've also seen a substantial increase in food price inflation, and this is being driven by high agriculture commodity prices primarily. So, in Kenya's case, the country, although it produces large amounts of its own food, it does also import large volumes of certain commodities like cereals, oil, sugar, for example. But the situation has been aggravated in Kenya by currency depreciation. The shilling has lost increasing amounts of value against major currencies, including the dollar, over the last few months. And this is driving up the price of imported food products into the country. But also Kenya is particularly vulnerable to high energy prices, and this is because it imports most of its energy requirements. It is not a massive domestic energy producer, and this contributes to rising costs for food manufacturers, for example. But also, particularly in the East African context, the drought, adverse weather conditions, which is lasting for a very long time, is contributing to weak food production and therefore squeezing prices for food in the country. The agriculture industry is the only industry that has contracted in real terms over the last year or so, and this really is a reflection of the severity of the drought there. So certainly a broad range of factors in Kenya, some of which are global, but some which are unique to the country in terms of driving up food price inflation.
So these factors, they don't sound like the protests can easily solve it, or the fact that the opposition agreeing to stay off the streets will solve the problem. Do we expect more highs when we look at the inflation numbers?
Yeah, I mean, that's a very good point. So unfortunately, there's very little that the government can do immediately, short of price controls, but that isn't really a sustainable or long-term solution. Yes, because these factors are largely out of the control of the government. But what we have done in terms of the outcome for, or the outlook for the inflation forecast, we have revised up our inflation forecast quite substantially for Kenya. So we were previously forecasting headline inflation to average about 7% this year, when we've now revised that up to about 11%, which is quite high by Kenyan historical standards. I believe it will be a 5-year high for the country. And this is largely being driven again by continued currency depreciation. We are forecasting even more weakness in the shilling, so this will continue to drive up the price of imports. We're also seeing globally, actually, although agriculture commodity prices have eased slightly over the last few months, our view at Frontier View is that we expect agriculture commodity prices to actually increase quite substantially in the second half of 2023, and Kenya will be vulnerable to this. And this is because of a stronger global economy, especially driven by China sucking in demand for food commodities. So certainly we are expecting global agriculture commodity prices to rise further in the second half of the year.
All right. So briefly now, Matt, because we're almost out of time, how do we expect all of this to shape the political landscape of Kenya?
Yeah, so our view is that it probably won't have much of an impact, although it does, rising food price inflation could stoke more unrests, especially in the second half of the year, depending on how bad they get. But actually, we do see in the short term some protester fatigue setting in, as you mentioned just now. Mr. Odinga has suspended protests. There is a bit of concern that the protests are not really achieving their desired outcome. We don't really expect the government to shift substantially in terms of policy. It doesn't have much fiscal capacity to introduce subsidies, for example, or price controls. So really, we don't see much of a shift. If anything, there's probably going to be a little bit of risk of social unrest in the second half of the year, but nothing fundamentally will change in our view.
All right. Thank you so much, Matt Keninga, practice leader, SSA Frontier View. Thank you for sharing your thoughts with us.
Thanks for having me today.
All right. Just before we go now, one story from Nigeria. Nigeria's wealth fund plans to focus on shielding its assets from market volatility this year after rising interest rates and surging food costs led to a 33% drop in earnings. Well, the Nigeria Sovereign Wealth Investment Authority, which manages 1 trillion naira, that's about $2.2 billion in assets, will use new inflows to buy debts that acts as protection against inflation and infrastructure assets to hedge its portfolio against market downturns. And this is according to the Chief Executive Officer, Aminu Umar Sadiq, who said this during an interview. And he says that they'll be focused on protecting assets against downside risks rather than chasing high returns. Choosing a safe place to be, and it's a safe place to end the program today. Thank you so much for being a part of Business Incorporated all through this week. Next week, Monday, we'll start all over again. Have a great weekend. I'm Ili John Mekwa.